After a 25-year run, S&P Dow Jones Indices says it wanted to ensure a representative exposure to semis. Sherwin-Williams will join the Dow as well, replacing Dow Inc., and those changes effective prior to the open of trading on Friday. Jim today mentions the lack of money index to the Dow.
I mean, this is the type of thing, before David gets into his atavistic rap about Dow Jones. This came out, I was doing my show. I have a show. And every time I say my show, my wife says it's the network show. It's not your show.
It is. They own it.
Right. But suddenly NVIDIA's up 3 on this. Of course, David, there's no money really indexed to
There's no money indexed to it.
This reverses.
Atavistic,
right? This
anachronistic, however you want to talk about it, something out of its proper place and time. It is a price-weighted index. It is statistically insignificant. They had to keep it price-weighted because they started it that way, and why we even spend time talking about it is beyond.
Okay, I'll tell you why. We do, because even though I say NVIDIA, only don't trade it, NVIDIA will go back to where it was Friday before this announcement came, and Intel is the one you want to buy. Pat Gelsinger and I, tight.
What did you just say? What came out of your mouth just now?
Told you, Pat Gelsinger and I are tight. That stock's done going down. It's ridiculous.
The sun also rises. I'm just reading it now. Tight means drunk. Just letting you know.
Pat's not even a
Hemingway.
Drinker. Pat doesn't drink.
I know. I'm just saying, things change. But back then,
talk about being inconsistent. Isn't he a Wall of Shame alum?
You were drunk.
No, Intel bottomed. That was a very good quarter. Pat Gelsinger showed tremendous humility. And I think that matters because before we got bravado, and he basically said, listen, we're a little behind. We're going to catch up. They don't have any really
Speaking of inconsistency.
In the ever-enthralling stock market realm, the latest news about Intel Corporation has grabbed significant attention among investors and market analysts alike. The well-known chipmaker recently confessed to a revenue shortfall regarding its AI accelerator ambitions. This reveals a dichotomy in Intel's strategic planning and execution at a time when giant competitors like Nvidia and AMD are making powerful pushes in data center technologies. As the technology landscape evolves at an unprecedented pace, Intel finds itself at a crossroads, trying to balance its rich legacy with the demand for cutting-edge innovation. However, not all is gloomy, with Intel's CEO Pat Gelsinger remaining encouraged by future market potentials. The question arises, will this giant stumble momentarily, or is it on a path to a complete strategic overhaul? Meanwhile, whispers of a potential takeover by Qualcomm Incorporated further complicate the scenario, adding a layer of intrigue to an already complex narrative. In a year where stocks are as unpredictable as a dart throw at a bull market, this latest update from Intel is nothing short of fascinating. The potential implications extend beyond mere numbers, touching upon the competitive strategies and potential industry shifts that are rooted deeply within the tech ecosystem. Welcome back, everyone, to Investocracy.
Following last week's earnings reports, with the exception of Nvidia, which has not reported yet. Those shares are rising on news the company will join the Dow this week. Here to share his view on the Mag 7 is the Dean of Valuation himself, Aswath Damodaran of NYU's Stern School of Business. Welcome back. It's nice to see you again.
Thank you, Scott.
As a shareholder and an observer, and both are valuable to us, you've had a chance now to digest these. What's your takeaway?
I think that these companies have become really good at playing the earnings game. I mean, you look at them; they look at the expectations. They come in 2 to 3% above. At this point, you're wondering why even bother with the expectations. They're going to beat it by 2 or 3%. I think the real story, though, is deeper in the earnings reports, and I think you see it play out with, for instance, Microsoft. The recognition that AI's products and services, the potential is there, but the promise is not being delivered in terms of monetization. So I look across the companies, no blowouts in either direction, but I think in many ways, what you need to be looking for is a change in narrative, and it's not coming right now. It's pretty much the same narrative that's been running them all year long.
The world of technology has always been synonymous with fierce competition, and when it comes to AI accelerators, Intel finds itself in a challenging yet intriguing position. During its recent third-quarter earnings call, CEO Pat Gelsinger acknowledged that the Gaudi AI accelerator program won't hit the ambitious revenue targets for 2024. This revelation highlights the struggle in transitioning from Gaudi 2 to Gaudi 3, alongside issues with software user-friendliness. The path from conception to execution in tech is riddled with hurdles, and Intel's story is a testament to this intricate journey. But let's face it, Hitting revenue targets in today's frenetic and competitive tech landscape is as tricky as deciphering the stock market with just a crystal ball and a whimsically pointed finger. There's more than just dollars and cents at stake. It's also about the race to lead in advanced technology solutions that can reshape industries and influence global standards. Although Nvidia, with its jaw-dropping revenue reaching $26.3 billion in Q2 2024, seems to be riding high on the AI boom, Intel is not entirely out of the game. While its data center revenues have faced a decline, it's crucial to note that Intel's performance, although lagging compared to Nvidia, is still significant, with revenues consistently above $3 billion. On the other hand, AMD finds itself gradually gaining momentum, posting a promising $3.5 billion in Q3 2024. But before we go any further, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates.
If we talk about the influence of a Berkshire selling, then influencing how the stock trades as it relates to Apple, what does this mean for how the stock trades as it relates to Nvidia?
I think it keeps its momentum. It's the relevance. It's taking Intel out and replacing with Nvidia and basically saying, hey, this is a company that's going to be there for a long time. Now, you're not going to get that positive tailwind that if it came into an S&P, because there are not that many people that buy the Dow index, but the relevance of this to show that, hey, these products are going to be here for a while is really good for the stock.
This upswing underscores AMD's strategic positioning and growing influence in the semiconductor industry. Meanwhile, Gelsinger's optimistic outlook suggests an ongoing belief in Intel's strategic adjustments and potential market opportunities. There is a clear need for solutions with superior total cost of ownership, he asserts, aiming to fortify Gaudy's value proposition. His confidence is rooted not only in the current assessment of market needs, but also in the adaptive capabilities that Intel possesses, a trait that has historically driven its past successes. As we dissect this narrative, one must remember that the stock market isn't just about numbers. It's a compelling drama of power moves and strategic shifts, where 1 second you're at the top and the next you're struggling to keep up with rivals. Intel, with its market capitalization of $92.73 billion, may be lurking behind Nvidia's towering $3.256 trillion. But in the world of tech, the tables can turn with the right innovation or acquisition. The whispers of a potential Qualcomm takeover aren't just market rumors. They underline the precarious phase Intel finds itself in. Such a move could send ripples across the industry, possibly sparking a new wave of innovation or consolidating key market positions, echoing through supply chains and partner ecosystems. Despite the challenges, Intel's stock is still sparking interest, evidenced by a 6.8% rise in pre-market trading. As investors rally around Nvidia's $134.27 stock and see potential in AMD's $144.99, Intel continues to captivate minds by not just its current standing, but its future possibilities and perhaps even its potential transformations. The situation invites both skepticism and curiosity, painting a broader picture of the technological future. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
I asked you earlier about Berkshire selling Apple, so let me flip it and ask you about Nvidia now and the inclusion in the Dow and how you're thinking about that based on what you've seen through the years.
Yeah, I mean, obviously, on some level, the inclusion of Intel previously and not having a play on Nvidia, which is 7% of the S&P 500, probably just made the Dow feel a little bit unrepresentative of the economy right now. Now, you could definitely make the case that it's just grabbing onto a high momentum play way after the fact, after its greatest gains. I was just looking at the Nvidia versus Apple equation in terms of, market cap neck and neck right now. Well, Nvidia has about a third of the revenue in the coming year and about half the net income. So you could obviously say it's a more expensive stock, but it's growing so much more quickly. So in the short term, first of all, there's no brand new reason to buy a stock because it's in the Dow. History says that's not at all a reason to buy. There's not a lot of money indexed to the Dow. It's much more about, the way that it's validating its current role in the new tech economy, which we sort of knew already. So again, I don't think it's a sell the news. Maybe it's a buy because of the capitulation on Intel. But at this point, it seems much more about the Dow trying to stay relevant.
As we delve deeper into the fabric of Intel's strategic playbook, it becomes imperative for investors to assess its current standing and the expansive market potential that Intel may harness with further advancements in its AI formulations. The evolving storyline carries a weight of expectations from various industry stakeholders, each keenly observing Intel's next moves in this unfolding narrative. With an underlying confidence emphasized by Pat Gelsinger in the company's direction, the pieces seem set for a strategic comeback. The echoes of his optimism resonate through investor circles, offering a sense of assurance despite the apparent setbacks. While the stock market demands both vigilance and foresight, Intel's ongoing saga, compounded by the context of significant competitors either scaling heights or facing challenges, leaves plenty of room for thrilling twists in the plot. The never-ending ebbs and flows of the market create continuous opportunities for analysis and strategies to navigate the complexities. As the ticker floats at $22.98, Intel remains an intriguing prospect that warrants a calculated gaze from investors intrigued by its roadmap and potential transformations. The market waits with bated breath, balancing portfolios and predictions on this evolving narrative. Each decision and market shift could redefine path and reshape horizons, effectively crafting new opportunities. As a stock aficionado or a nascent investor, what insights do you draw from Intel's current arc? Is it a time to consolidate wisdom or venture boldly forth based on emerging trends? Your outlook could be the key to unlocking the next big opportunity in this ever-dynamic marketplace. The canvas is wide open and the brush is in the hands of those willing to paint a new future. And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.